Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, here with this week's Stock Power podcast. Now, today, I'm going to discuss a power stock for a company that designs and markets some of the most comfortable dress shoes in the world. It rates a 98 on our stock power rating system. Before I get started, though, if you do have a question about a stock or maybe the broader market, you can email us. The email address is feedback@moneyandmarkets.com. If we use your question in an upcoming video, whether it's for me, for Adam, or for Charles, we're going to hook you up with some very cool Money and Markets gear. We've got hats, we've got t-shirts, sweatshirts, all sorts of good stuff. And also make sure you head over to moneyandmarkets.com. It is your home for safe, sound, smart, simple, profitable investment information. On the site, you can check our proprietary stock power rating system. It rates thousands of stocks based on 6 technical and fundamental metrics. You can create your own watch list, track your stock performance, and get our in-depth analysis, and it's all there for free. Now, when I was a journalist, I didn't spend a lot of time, behind a desk or on the phone. I was out in the field, on my feet, all the time. And because of that, I required a comfortable pair of shoes, and not just any old tennis shoe was going to do for me. And this leads me to the 98 rated power stock that I have for you in this episode of the Stock Power podcast. Now, I didn't wear jeans and t-shirts whenever I was working in the field. I dress professionally, like pants, golf shirts, things like that. I try to look as professional as I possibly could. Now, the challenge in finding the right shoe was finding something that looked nice and was comfortable to wear, because like I said, I was on my feet all the time, and I really didn't want to sacrifice comfort for something that is maybe look better. So I want to try to find a nice balance. Now, I found a company that rates a 98 on our stock power rating system. Its maximum momentum is exactly what we look for in stocks, as it produces some of the most comfortable dress shoes on the market. Now, as I said, people will skimp a lot on things when it comes to clothes. We'll buy cheaper, we'll buy a little more thrifty, especially when inflation is high as it is now. But one thing I'm not going to skimp on is a comfortable pair of shoes. Now, granted, I'm not going to drop $200 on a pair of sneakers. I just find that to be somewhat odd, but that's just me. But I will spend more on a comfortable pair of shoes that I know I'll wear for a long time. I must have gone through dozens of shoes before I found the right brand and the right fit just for me. Everybody's different, so everyone has their own brand. Everyone likes their own style. Some of the dress shoes I bought look good. My feet just were killing me at the end of the day, especially if I was up and around for 10, 12 hours, working. Now, in today's podcast, I'm going to share a power stock that designs, produces, and sells some of the most popular dress shoes for men, women, and children around the world. Now, in 2021, the value of the global footwear market was around $385.5 billion. Allied Market Research projects that that's going to jump to $530.3 billion by 2027. That's a 37.6% increase over last year. Now, I'm going to share this top company with you. It's got a strong bullish 98 overall rating. It means we expect it to beat the broader market by 3 times over the next 12 to 24 months. Today's stock is Weyco Group Incorporated. It trades on the Nasdaq. Its ticker symbol is WEYS. The company designs and distributes shoes, boots, and sandals for men, women, and children, and they do it worldwide. Some of its biggest names that they market are Florsheim, Nunn Bush, and Stacy Adams. Now, WEYS, W-E-Y-S, scores a 98 on our proprietary stock power rating system, which means we're strong bullish, expected to beat the broader market. It scores very high on our size factor. It scores a 99 there. It's got a market cap of about $284.5 million. Now, as we know, small company stocks tend to outperform large company ones and give you those bigger returns that you like to see in your portfolio. This is also a very high quality stock as well. It scores an 87 on that metric. Its return on investment is 11.3% compared to the apparel and accessory industry average of 10.3%. WEYS has a gross margin of 39.7% and an operating margin of 10%. Volatility and momentum are other factors where WEYS scores very high. WEYS is up, the WEYS stock rather, is up 41.5% over the last 12 months and is currently trading about $3 above its 50-day simple moving average, which is a bullish indicator for stocks. It's also beating its industry peers, which are averaging down 24% over the same 12 months. So you've got WEYS, which is up 41.5%. Its industry peers are averaging down 24%. Now, WEYS is showing that maximum momentum that we love to see in stocks. The company has rebounded nicely fundamentally after a sluggish 2020. the COVID pandemic hit Weyco particularly hard. Annual revenue dropped from a record $304 million in 2019 to just $195.4 million in 2020. That's a 35.7% drop in just 1 year. However, the company roared back in 2021, posting annual revenue of $267.6 million. That's an increase of 36.9% over that 2020 drop. In its recent quarterly report, the company stated that the new year has started off on the right foot, pun intended, by reporting net sales of $81.4 million, a 73.6% boost over the first quarter of 2021. So it already started 2021 off nicely, and now we see in 2022 it's even better. So I foresee very good things here. And it shows me that WEYS is definitely heading in the right direction. Now, we all need a pair of shoes, and we're not going to settle for something cheap and uncomfortable. We want something that looks nice and fits right and makes our feet feel good when we walk, especially when we're on our feet all the time, as it makes some of the most popular and comfortable dress shoes on the market for, across all ages and for men, women, and children. WEYS should be a serious contender for your portfolio. And as an added bonus, just thought I'd toss this in there, the company has a forward dividend yield of about 3.25%. It means that pays shareholders 96 cents per share per year just to own the stock. Not a huge dividend, but it's certainly nothing to scoff at when you're looking at maybe trying to make a little extra income on your investment. Now, let's look back at our YouTube poll question from last week. We tick back to inflation. Inflation in the U.S. has hit a level that we haven't seen in decades. And we asked where you were feeling the most inflation pain. Now, not unexpected, 53% of you said that you were feeling it most at the gas pump, as the average price of gas, a regular gallon of gas, or of unleaded gas, topped $5 per gallon nationwide. 27% said you were being hit hardest at the grocery store, while 13% said housing, meaning like rent or mortgage or mortgage insurance, were really hitting your pocketbooks. 5% said your wallets hurt the most at a car dealer when you're going to buy a new car. The price of new and used cars continues to go up. Now, we also received some comments on inflation. Kim said, "I'm just grateful that I own my car and house. Can't afford food or prescriptions." And that's unfortunate. I'm very sorry to hear that, Kim. No one needs to be in that kind of a situation, and it's tough, and millions of Americans are seeing the exact same thing. XTC Trader added, "It's all over. Inflation is hitting everyone and everywhere." And that's true. It is. Core inflation, which is the change, the cost change for goods and services, not including food and energy, was 6% in May. But when you throw in food and energy, which is what we spend most of our money on a regular basis, that rate jumped to 8.6%, the highest since 1981. And there's really no telling what the next few months are going to bring for us. The Fed is trying to do some aggressive things to maybe tamp down inflation. Is it going to work? We really don't know. It's hard to say, but right now we're all feeling that pain in our pocketbooks. Thank you to everyone who took part in our poll. We appreciate that. Remember, you can vote in our weekly poll on our YouTube page. Just go to youtube.com, search out Money and Markets if you're not already there. Right under the community tab on our homepage on YouTube, you'll find our most recent poll. Vote. Would love to hear what you have to say. Now, if you have a question about a particular stock or maybe a sector or maybe the economy that you'd like either Adam, Charles, myself, or all three of us to take a look at, you can email us that question at feedback@moneyandmarkets.com. We'll flash that right down below if you're on YouTube. Feedback@moneyandmarkets.com is the email address, or you can comment below on our YouTube page. We'd love to see what you have to say. If we do use your question after you submit it in any of our videos, we're going to hook you up with some very cool Money and Markets gear, hats, t-shirts, sweatshirts, all sorts of good stuff. We'll hook you up for sending your question and for us using it. Also, head over to moneyandmarkets.com, sign up for our free daily e-letter. We give you safe, sound, smart, simple, profitable investment information. If you're not, also, you'll be able to sign up soon for our Stock Power Daily email. And in that, every day, I give you one highly rated stock to take a look at as a potential investment for your portfolio. You can also check out our proprietary Stock Power rating system on moneyandmarkets.com. Use our metrics to get the ratings of thousands of stocks. If you go to the homepage of our website, moneymarkets.com, and in the top right-hand corner, you'll see a search bar. Just type in a ticker or a company name, and you'll be able to see all sorts of great stuff, including the ratings of the stock, fundamental data, stock chart. You can add stocks to your own personal watch list. You can do all that for free at moneyandmarkets.com. That's all for me this week. Until next time, this is Money and Markets research analyst and host of the Stock Power Daily Stock Power podcast, Matt Clark, wishing everyone safe trading.